how did you get into the game? How did you get into this? I mean, you have a $1 billion of real estate acquisitions underneath your name. $1 billion. It didn't start. It's not
That
like you
sounds
were
big
born.
when you say it.
Yeah. I mean, that's
Yeah.
huge. So talk to us.
Yeah. So first off, if you're listening today, you want a copy of the book, just go to nextlevelincome.com and you can click on the book link. And as you know, Mike, you can put your address in and I will send you a copy. I'll have my assistant send one out today when you put your address in. And the reason I wrote the book is really kind of at the heart of what you just asked me, Mike. It's to give you the shortcuts to not make all the same mistakes I did, because real estate, while it is a get rich slow game, I learned a lot along the way. And how I started was I started small. I started buying single family properties, which is great, and especially, if you look at one of the big advantages of real estate that I talk in the book, it's leverage. And I bought my first property at 21. I was in college and I bought one of the townhouses up the road from where I live. And now we call it a house hack. Right. We have all these names, that we've created around some of these strategies that are out there. But at the time, I just thought it'd be cool to own a piece of real estate that I could rent out to my friends and essentially live rent free. But my big thing that I was doing at the time, Mike, was I was day trading. And I was actually doing pretty well. Like I was making like $5,000 a month some months as a junior in college day trading. But day trading is not investing. It's a job. And it's a very stressful job at that. And it's very risky as well. So, I mean, you know the business of sales. Sales is stressful, but sales has a lot of upside. Your income is at risk, but you have a lot of upside. Your downside is kind of limited. It's like, well, maybe you don't make money, but if you don't make a sale, it's not like somebody comes and actually removes money out of your pocket. Whereas if you make a bad trade, you wake up the next morning or you check your balance at the end of the day and it's gone down. Your bank account has gone down. It's kind of like if you were a bad salesperson and the company said, well, hey, Mike, you had poor service today and your bank account goes down in value. And I was like, this is not how I want to live my life. I was like laying there at 3 a.m. one morning. I was like, there's just got to be a better way, than this. And it dawned on me that was not investing. And I continued on this journey for, financial, literacy to figure out how I could become financially independent as quickly as possible. And I read during that period, over 250 books. I was reading a book a week. By the way, if you want to read a lot of books, read a speed reading book first. That's a great way to do it.
Nice.
Or just get used to listening to books very quickly. So if you download my book on Audible, listen to it at 1.2, 1.5, 2x speed. And you can really rip through some books when you do that. But what I discovered during that journey was that real estate provided a lot more stability. It provided the ability to provide income. And I always say now you have to have passive income to have true freedom. It provided the ability to increase your capital appreciation. And in a lot of ways, like what we do, you can force that appreciation. And then one of the cool things is you have leverage. So that first townhouse I bought, it was with less than $3,000. And it wasn't expensive. It was a $90,000 townhouse. But I bought that. And like I said, it took me about 15 years to really figure it out. But I think this will really highlight it. What happened was when I sold that townhouse, I did what's called a 1031 exchange. I paid no tax. I bought a 7-unit office building, or it's actually technically a condo in a larger building. And that property. So I took that $3,000 initial seed investment, bought that property. 2 years after I bought it, it was appraised for over $800,000. And today that property pays me over $3,000 a month. And I've gotten my equity back as a multiple of what I put into it. And I still have not paid any tax on that initial money. So, when you say over $1 billion, there's a lot of factors that go into that. Time, leverage, working with a team and working with other investors to do it have all been factors in that. But that little story I told is something that anybody can do. And I talk all about
I'm breaking
all the
this
basics
down.
Yeah.
I'm breaking this down, Chris. So I have a couple of quick follow-ups on this. And by the way, kudos to you, man. I mean, for you to be able to do what most people talk about doing, it's like, let me take a small investment and put it into this house and then turn that investment into the next thing. It's like people talk about this, but for you to break it down in simple step by step is what I really appreciated about your book. And I want to get into a lot of that. But right now, I want to break down what you just said. You're 21 years old.
Yeah.
You're getting your MBA in finance and your degree in biomechanical engineering at Virginia Tech.
Yeah.
And you bought your first single family rental, which was, you said it back then, is 90 grand. Does this still apply today? I mean, because obviously, today it's a little different than it was back then, like getting approved mortgages, turning that $3,000 and, getting approved at 21. Like, how does that line up for today's dollars and today's market?
Yeah, that's a great question. So first off, man, I'm looking at some of the books on your bookshelf. You got a heck of a a collection back there.
Thanks.
And here's the thing, like, Tony Robbins says it. And I don't know if you have, Robert Kiyosaki's book back there,
Oh, for sure.
Rich Dad, Poor Dad. But I figured that's why I was kind of scanning. But here's the thing. Robert Kiyosaki says the deal of a lifetime comes along every day. So a lot of people can listen to that story and say, oh, well, yeah, Chris, well, you started when you were 21, or yeah, you could do it back then. You can't do it now. Well, hey, guess what? We didn't have Airbnb back then. I couldn't do Airbnb back then, right? You can do Airbnb now. I got a friend. He makes about 7 figures a year on Airbnbs. Okay. And he just started back in 2019. So, it's not really important what the specific strategy is. It's the vehicle, right? So you say, hey, there are different vehicles. There's cars, there's sports cars, there's trucks, there's dump trucks, there's jets. There's all kinds of different vehicles out there that can get you from one place to the next. That's real estate. There's all different types of real estate and strategies within real estate. That being said, you can still do that today. It might not be in your backyard. It might not be in San Francisco. It might not be in Chicago or New York City, but there are places in the country that you can use that exact same strategy. The numbers might be a little different. But let me tell you how I did it specifically and how you can do it today if you're trying to figure this out. So first off, I didn't have credit. I had a credit card. I got a credit card fairly early because I was like, okay, I started to learn how to, you had to have a credit card to start to build credit, but I couldn't get a loan. So my mom signed on the loan with me. And then I ultimately bought her out of that property, is how I did it.